Last month, I asked you what your biggest struggles and problems as traders are. And today I've picked the 11 most common and most interesting questions, and I will go through them one by one and have some tips for you. This first question was sent in many different variations, and I think it's a very common one. The trader said, "My problem is that I tend to close my winning trades too early because I'm scared that the price will reverse. Every time the price struggles, I'm thinking of closing the trade." And this is something that I have seen in many traders, and I think it's very common. And this is the first good news, is that there's nothing wrong with you, and for the first few months and the first few years, you probably will not be the most confident trader, especially if you're just starting out and if you haven't seen great results yet. So don't expect anything else. However, there are some tips on how to improve your confidence. The first thing that I would always recommend is make sure that you do a proper backtest. And what is a proper backtest? First of all, you write down all of your strategy rules. You write down everything from an entry to stop loss placement, to targets, to exits, to trade management. Most traders will already struggle here. And if you are one of those traders that doesn't have a clear plan on how to approach your trade in every single possible way, then of course you will suffer from confidence issues because you have no clue what to do once you're in a trade and what to do with your trade. Most traders spend all of their time just looking at the most important thing, which they believe is the entry, but then they forget everything else. They have no idea what to do once they're in a trade. And then clearly you're going to make mistakes because you have no idea what to do and you're jumping all around. So first things first, make sure that you have a complete trading plan and you are clear with all of your trading rules. Then on the backtest, you go back a few months, maybe 2 or 3 years, and you backtest as much as you can. And you do a proper backtest, which means that you record a screenshot for every single trade from the entry and from the exit. That is very, very important. Grab a screenshot from every single backtested trade and also keep records of every single trade that you're backtesting. And the good thing and the benefit, what will happen is that you start to understand what is normal for your trade. So you have a system, you take trades that are hopefully very similar, and in many ways they will behave very similarly. So you will understand what is the average path that the price is going to take during a trade, what is the average pullback that the market is going to do when I'm in a trade, and you will see that very rarely will the market just go to your target in one straight line. What is probably going to be happening when you see that in your screenshots and in your backtested trades is that the market will go a bit, pull back, go a bit, pull back, and this is the normal path of price. And once you have seen that for a few dozen, maybe 100, maybe 200 times in your backtest, you will understand that this is normal. There's nothing abnormal. There's nothing to worry about. You will understand what is a regular pullback versus what is a pullback that is not normal and that is too deep. And once you have done that and once you know what to expect, then you can make much better trading decisions. You can be confident in your trades when you have a pullback and you know this is normal. And when the pullback is not normal anymore and you have seen it with your statistics, with your own eyes on dozens and dozens of trades, then you can close your trade with confidence as well, and you know you have done the right decision. But everything starts with putting in the time. Most traders will never do that, and then obviously you're going to struggle with confidence. How can you be confident if you have never put in any time and you have developed no skills at all? Next question, what is the best time to leave your job and become a full-time trader? And this question is asked many times as well, and the clear answer is here: if it is not very obvious that you can quit your job now to become a trader, then it's not the time to quit your job. If you're making so much money from your trading that you can easily replace your day job, then it's time to quit your job. If you're not making enough money to support yourself and your family, obviously then it's not the right time to quit your job. What happens is when you make the transition to full-time trading and you quit your job, is that your results will often suffer because now suddenly you have a lot more added pressure. So you have to make sure that you are such a good trader and your capital and your account is so big that you can easily support yourself even if you don't make money for a few months after you quit your job. Of course, it also depends a little bit on your life situation. Are you in your early 20s? Then you may be able to take a little bit more risk compared to someone who is in its late to mid 30s or 40s who has a family to support. Obviously that plays into it as well. But if you cannot make money as a trader regularly now, then obviously it's not time to quit your job. Next question, the trader said, I'm blowing accounts like crazy. I can't get a strategy that I'm 90% confident in when taking trades. I'm always doubting my trades because of my past losses. I can't get over my losses. I learned many strategies from mentors, but still cannot trade comfortable with them. So again, the trader said many interesting things. One thing that stands out is that he said he learned many strategies. And I've seen many traders who do that. They find a new mentor, they buy a strategy, then they apply it for a week, maybe a month, and then they don't have the results that are advertised or that they're looking for, and then they move to the next best thing, and then they do this for years and years and years. However, this is not how you build confidence. You have to really understand the strategy. You have to put in the time. You cannot just buy a strategy and then expect to have great results from the get-go. You have to understand what the strategy is all about. You have to learn the rules, how to apply it. You have to know what to expect it. What is the expectancy of the system? How many trades do you get in a day, in a month, in a year? What is the win rate? What is the average reward to risk ratio? What are drawdown periods like? And all of those things have to be done through experience. There's no shortcut to that. Again, I would recommend do a backtest, do a proper backtest, not just crawling through past charts and looking for how much money you could have made, but really replay a year, 2 years, 3 years on as many markets as you can, take very accurate data and then analyze the data. Then you can build your confidence much quicker. You know what to expect, and then when the first string of losses comes around, you're not likely to quit again and jump to the next system. Good question. Why do some supply and demand levels work? And this question was sent in many different variations. Why is sometimes the best support and resistance failing? Why is the moving average sometimes working so well and sometimes it's failing? And this is really pointing to the core of trading, what we are doing as traders. Traders are playing with probabilities. And you have to understand that no matter what tools you use, no matter how good a chart will look like, you have no idea what will happen next. Even the best level, the best setup, the best supply and demand zone will fail. And there's just nothing that you can do about it. You have to accept the fact that we are dealing with probabilities, and we have to accept the imperfection of the markets and of our system. The best thing that you can do as a trader is to really internalize this fact that no matter how good you are as a trader, you will never be able to 100% accurately forecast the market. What you should be doing instead is to work on losing. How do you lose in the most effective way? You cut your losses, you understand that losses are normal, you don't cling to your trade, you don't try to force a winning trade. When you see that a zone, a level, whatever it is not working out, you get out, you minimize the losses, and when another setup comes around, when it's working out, you try to ride the trade as optimally as possible, so that when you make money in your setups, you make enough so that you can cover your losses. You have to stop trying to fight something that works 100% of the time. This is one of the main reasons why many traders will never see any success, because they're just jumping around from system to system. They want to find something that works 100%, 90% of the time, but this is not realistic. Make sure that you understand that nothing what you're going to do is working 100% of the time. You can never predict what is happening next, and even the best setups will fail many times. Next question, most of the time I trade against the trend. I lose my monthly profit in a single day. The real problem of this trader is the second part of this question. I lose my monthly profits in a single day. This should not be possible. If you have made whatever it is, 5–10% a month, and then you lose it in a single day, you have obviously made a huge mistake, and only you are to blame. If you have good risk management principles and position sizing rules in place, this should not happen. Make sure that you have clearly defined your position sizing. What is it? 0.5, 1%, 2% per trade, whatever it is, make sure that you have your number ready, you know your number, and also have a maximum drawdown number. How much money can you lose in a single day? And make sure that once this number is hit, you close your trading platform, you walk away, and you cool off. It should never be possible to lose all of your monthly profits in a day, or some traders, what they say is that they lose all of their trading account in a single day. This should not be possible. If you're one of those traders that this is happening to, you are not a trader, you are a gambler, because you have no position sizing and no risk management. I like this question. This was sent in many variations, and the trader said, all the time I do a good analysis, and then after placing my order, the price turns into the opposite direction. Then I will close my order and then afterwards the price will turn back into the initial direction. And again, this is the problem of trading without confidence. And I'm very sure that those traders have not put in the time to either do a backtest for a few dozen trades or have a complete trading journal. You have to really understand the premise of your trading system and what are you trying to capture. Are you trying to trade trends? Then make sure that you understand how trends behave. What is a regular pullback? What is a normal pullback that you can expect? How much is the market going to go against you when you're in a trade? All of those numbers you have to know. If you don't know those numbers, you have not done your job as a trader. And then obviously you should be not confident because you have no idea what's going to go on around you. But once you know that when you're in a trade, the market pulls back a certain amount of time and a certain amount of points, then you can trade with a lot of confidence. So the first thing is to understand you have to put in the time. You have to treat your trading like it's a job. You have to schedule in at least a few hours every week to do a proper backtest and get hundreds and hundreds of trades into your backtest, and make sure that for every trade that you have backtested, you have a screenshot and you have a record in your Excel or whatever you are using to record your trading results. You have to make sure that this is all in place. And then I can almost guarantee you your confidence issues will go away. Next question. While buying options, it becomes tough to sit on a trade for big reward to risk ratio. How do I increase my win rate and the winning size simultaneously? And yes, that would be great, huh? We win a lot and we almost never lose. However, there is a huge trade-off in trading, and the trade-off is exactly between the win rate and the winning size. You have to settle for one or the other. You cannot have a high win rate and a big reward to risk ratio. Those things cannot be combined, and it's a common sense issue. Look at your charts and look at trends. How common are big trends? How common is it that the market will just keep going and going and going? It is not as common as seeing small, mediocre and short-lived trends, right? So once you understand that big winning trends are not very common, then you can settle for the right combination of win rate and winning size. In the beginning, your first few years, I would always recommend go for a system with a higher win rate, and how you get there is by going for reward to risk ratio that is much lower than what you would generally consider. So whatever this may be, 2-to-1, 3-to-1, 4-to-1, that's it. If you do that, you will have a much higher win rate than going for 10-to-1, 20-to-1 reward to risk ratio trades. And this is a common sense thing. Look at your charts and analyze what are trending markets looking like, how common are big trends, and once you understand that you can settle for the right combination. Next question. While trading in real time, I tend to forget position sizing. The stop loss never comes to my mind while initiating a trade. And I don't want to be too hard on this trader. So this question shows that the trader doesn't have a complete trading plan. For a complete trading plan, you need to make sure that you have defined your processes and all of your rules. What does a good entry look like? What are the criteria for your trade entry? How do you place your stop loss? What are the rules for your stop loss placement? What are the rules for target placement? What are the rules for your position sizing? How much percentage per trade do you risk? And also your process has to be in place. When do you do your analysis? When is your trading time? How do you execute your trading plans? All of those things need to be done before you sit in front of your screens, because you want to arrive at a point where you just execute your plan once you pull up your charts. You don't want to figure out things on the fly when you are about to take a trade. It should be all done previously. You should just follow your trading processes, and the processes need to be done in advance. So before you even think about taking a new trade, close your trading platform and really write down your processes and write down every single rule. Get maybe 5 to 10 screenshots of the perfect and optimal trade that you want to take. Write down what they have in common, write down the rules, and then create a checklist. And then it's only a matter of following the checklist. And if you cannot do that, you should not be even trading, because what you're doing then is just gambling, jumping in and out of the markets. You have inconsistent position sizing. You don't even use a stop loss. And that is a huge, huge red flag. I like this question. Why do I always lose when I'm in a trade, but when I wasn't able to enter the trade with the same setup, most of the time I win? And I've seen many traders who tell themselves that this is the case. Many traders even believe that they are somehow cursed, that there's something wrong with them. However, what is really happening here is that you're working with your hindsight bias, or rather that your hindsight bias is working against you. When we look at a chart where everything has happened, the winning trades stand out very clearly, and it's very obvious what you should have done with hindsight. However, when things are happening, when things are unfolding, when you don't know what is happening on the right side of your chart, then everything looks very different. So what I would recommend is that you replay your trading month, your trading week. So in TradingView, it's very easy. You replay the month and you just go candle by candle and see what would have been realistic to achieve that week and that month. And if you eliminate the hindsight bias, at least with some degree, and you're really objective about the charts that you're looking at, you will see that there's nothing wrong with you and that you're not only missing the winning trades. Another thing that is often happening is that when you look at past trades that you haven't taken, it's very clear what you should have done, obviously, right? However, what I've seen that if you would have been in one of those potentially winning trades, the trader is very likely to mess it up anyway. Even if it's a very clear trade, there will be a pullback, there will be a time where the market is moving against you, and you're going to make a wrong decision. Maybe you don't even have a trading plan, so you're just going to act randomly and impulsively. So don't believe that just because it looks so easy on your charts, you would have made the right decision. And I think this is a very important thing to come to grips with, because if you're one of those traders who believes in just always making the wrong decisions, this will again take away from your confidence and it will cause frustration in your trading. So it's very important that we have a realistic understanding of our skills as a trader, of the potential issues, why we make mistakes and how to fix them. And that's it for this video. I really want to thank you for the questions that you have sent in. It's great to see all of this support on my YouTube channel and also on the podcast. So thank you so much for that. I really like this format, so I'm surely going to do it again in the near future. Thank you, and I look forward to hearing your comments.